Good morning. Thank you for joining us today. My name is Hannah Boob and I'm the Communications Manager here at MorePay. It's my pleasure to introduce the topic to you for this session, which is the autumn statement. Following last week's announcement of the new policies, my colleagues Dylan and Ines have analysed the proposals, assessed the impact that they could have, and also discussed the questions they believe remain unanswered from the autumn statement. So this morning, we'll be taking you through the key takeaways from a payroll perspective. A couple of things to run through before we get started this morning. So in terms of how to ask a question, you'll have noticed your microphone is on mute, but we do want to hear from you, especially for the live Q&A at the end of the webinar. So please do drop your questions into the question panel throughout the webinar and we'll cover them off at the end. We've had an incredible response to this webinar, so I imagine we will have lots of questions, but like I say, we will do our best to run through as many as we can at the end. Another note, if you're facing any technical difficulties, don't worry too much. We will be sending you all a copy of the recording and also the slides after the webinar. However, if you are facing any technical difficulties, please do flag them in the question panel, because if we get lots of them flooding through, we'll know there's an issue at our end and we can do our best to fix that for you. So moving on to the agenda for this morning, we'll start off by giving you an overview of the autumn statement before focusing on key announcements for payroll. Afterwards, we will take a moment to discuss what we don't know yet following the autumn statement, and then, like I say, we'll move into the Q&A session. We had scheduled 45 minutes for this webinar. However, there aren't a huge number of changes from a payroll perspective, so it may well be that we do finish a little ahead of schedule and you will get some time back in your diaries, which I'm sure some of you will be pleased about. Before I hand over to Dylan and Ines, I'm conscious that there will be some people on the webinar this morning that aren't familiar with MorePay, so I'll give a very brief introduction. We provide payroll and HR software, as well as outsourcing services to UK businesses. We've been around since 1966, have all the accreditations you'd expect, and we're rated excellent on Trustpilot. Our promise is to make payroll and HR easy, and here's how we do it. We've built payroll and HR software that's easy. We deliver quality outsourcing options, and all of this means worry-free compliance for our businesses. So moving on to our presenters for this morning. First up, we've got Dylan. He's our Senior Product Manager here at MorePay, and he joined the business in January 2022. He's responsible for identifying customer needs and business objectives and turning that vision into a reality here at MorePay. Prior to joining the team, his career spanned a variety of roles in software development and payroll, including engineering, sales, professional services, as well as product management for cloud solutions. And moving on to Ines, she's our payroll product associate. She's joined MorePay's parent company, Zealous, in 2016, where she began her career in payroll on the payroll customer service help desk. Thanks to her hard work and passion for payroll, she was quickly promoted to Senior Payroll Administrator, and in 2021, she joined MorePay's product development team as the Payroll Product Associate. She's now responsible for our legislation roadmap and loves the challenge and excitement that comes with this role. So I will now hand you over to Dylan and Ines to take you through the main body of the presentation this morning. Thank you.
Thanks, Hannah. Can we go to the next slide, please? The last few months particularly have been pretty turbulent fiscally, and the autumn statement that took place on the 17th was supposed to fix that from a point of view of managing inflation and targets that the government is planning to make over the next few years. The OBR, the Office for Budget Responsibility, has confirmed that it's global factors that are the primary source of inflation, and the IMF has already said that they expect 1/3 of the world economy to be in recession. So the idea of the autumn statement from Jeremy Hunt was to address those concerns. There were a number of things that were covered all around the cost of living crisis and rebuilding the economy, and in his statement he did stress three specific areas that he wanted to concentrate on. for stability, growth and public services. There are, as far as the key announcements are concerned, a lot of them were broadly around financial areas such as government spending, the economy itself to tackle the recession, the energy crisis and so on. But there were two main areas that are specifically around payroll that were dealt with. There was one around tax, which Ines is going to take you through, and there was another around wages, which I'm going to be talking about now. So the main change on the wage point of view is the increase for national living wage and national minimum wage. For the most part, all of the different bands went up by 9.7%, as you can see, apart from the 21 to 22, which went up by 10.9%. Those figures are figures that will come into effect from the 1st of April. So note that isn't quite the same as the tax year. So please make sure that you are prepared for that in terms of your planning before the 1st of April. Ines, over to you.
Thank you, Dylan. So as you are aware, the biggest announcement for tax was the reduction of the additional rate earnings threshold. This is now to be reduced from £150,000 to £125,000 or £140 from the 6th of April 2023. This didn't come as a surprise, as it was heavily rumoured prior to the statement. Along with this, all other tax NNI thresholds and rates will be frozen until 2028, which adds a further 2 years on previous plans. This is on top of the indefinite delay to the basic rate of tax reduction that was scrapped as part of the growth plan rollback. So basically, everyone's a bit worse off because the inflation is going up, but all the tax-free allowances and thresholds are remaining the same. It was also announced that marriage allowance for 2023-24 will increase to between £4,010 and £10,375, and the blind person's allowance has been increased to £2,870. The other announcement was relating to benefit in kind. So we will now see company car rates increasing. So these are the rates at which the benefit in kind for the cars gets calculated. The government is setting the rates for until April 2028, and the rates for petrol and diesel vehicles will remain the same until 2025, when they will be increasing by 1 percentage point for 2025-26 up to a maximum of 37%. That value will then be fixed until 2028. There's also changes to the electric vehicles. The OBR forecasts that by 2025, half of new vehicles sold will be electric, and from April 2025, these vehicles will no longer be exempt from vehicle excise duty. So again, as the rates will remain as they are until April 2025, when electric cars, vans and motorcycles will begin to pay VED in the same way as petrol and diesel vehicles. So electric and ultra low emission cars, so these are cars that emit less than 75 grams per kilometre, will increase by 1 percentage point each year between 2025 and 2028 to a maximum of 5% for electric cars and 21% for ultra low emission cars. Also, and this was not included in the autumn statement, but we thought it would be relevant to include it in this webinar. From the 1st of December, HMRC has increased the advisory electricity rate to 8p per mile from 5p per mile. So this is the rate to reimburse drivers with electric company cars and will also now be reviewed quarterly in line with advisory fuel rates. There is also some speculation relating to the possible 23% hike in fuel duty from March next year. This is equivalent to 12p per litre. This comes as a result of the temporary measure put in place by the government in March this year to reduce the fuel duty by 5p per litre. This was meant to last until March 2023, However, we don't expect a decision on this to be made until the spring statement. There's also a number of things that we don't know yet, and we've not been advised if there's going to be any changes to statutory payments, student loan or postgraduate loans, mileage allowance. We also don't know whether there's going to be any changes to Scottish and Welsh rates. At the moment, they stand as they are, and no further changes to termination payment and supporting testimonials. So these are things that we are still a bit uncertain about, and we will hope to have further information before the beginning of the next financial year. That is all from me. Any questions?
Thank you, Ines. So we will now move into the Q&A session. So please do keep posting your questions into the Q&A panel and we will work our way through them. So the first question we've received is, has there been any announcements relating to changes to the real living wage?
I'll take that one. So the real living wage, yes, the announcement was done a little while ago, actually. It's going up to, well, it's gone up already to £10.90 for the UK at large, and in London it's £11.95. The dates for that are that well, the idea behind this was to talk a bit more around what real living wage is. Real living wage is a foundation where the idea is to have more realistic wages for employees over and above what the minimum wage is that's mandated by the government. So it's something to look into if it's something that you're interested in doing in your organisation. But those are the rates that are already been announced and should already be in effect in your company. Thanks, Hannah.
Thanks, Dylan. And moving on to the next question, are there any tax implications for employees being paid salary before their normal payday, such as salary advance?
I'll take that. So the quick answer is no. The government has announced that they're making changes to the current legislation. So at the moment, any employee with payments advanced, the employers must submit additional RTI reports to record those advance payments. HMRC will now amend that legislation so that salary advances can be reported on or before the employee's contractual pay date. So this means that each payment of salary only needs to be included on the RTI report once. That's it.
Thanks, Ines. We have had a few people as well asking whether or not we will be sharing a copy of the slides. So yes, we will this afternoon be sending you an email with a copy of the recording and also a copy of the slides. So you will have those to refer back to. We have received one other question asking about whether there was any announcements about pensions. Said that someone mentioned that there was an announcement about pensions, and was that relevant to employers?
I'm not totally sure what the question is referring to. If that person can sort of elaborate a little bit, maybe.
What I'll do is I can always ask that I can always email that person afterwards and find out exactly which part of the announcement they are referring to. We haven't had any other questions at this point. What I will do is I will just point you. We have had one more. One more question. Will the primary threshold for NICs remain in line with the personal allowance?
Hello. So I'll take that. Yes. So at the moment, all the thresholds are remaining the same. So there'll be no changes.
That's great. Thanks, Ines.
Going back to that pensions question, the only thing that springs to mind is about state pensions. There was an announcement about state pensions, which was that triple lock, which is still applied. So they are going to rise in line with inflation. That's possibly what that person was asking.
Right, okay, thanks, Dylan. What I'll do is I will just point everyone in the directions of some additional resources, and then if we do receive any other questions in the next few minutes, then we can skip back to them, or likewise we can, or you can always send us an email this afternoon if anything does come up, and we can email you back then. So in terms of any of the resources, if you haven't already been on our knowledge centre, then I definitely would advise that you do so. It's on the main menu of our website, and it's packed full with lots of helpful resources. This is where we promote our upcoming webinars. We have copies of our payroll legislation guide that's updated on a bi-monthly basis. There's all of our blogs in there, and everything is free to download. So if you haven't already visited there, I definitely advise that you do. Like I say, there is a lot of useful content in there. Now, we have just had one more question, so we'll cover this question off before we close the webinar, and then, like I say, if you do have any other questions, then you can email myself, hannah.booth@morepay.co.uk, and then we can pick these up on an individual basis. So the only other question that we've had is what happens with the director's NI?
So my understanding is that it remains the same. So the rates are not changing. It's all as per the last announcement. So no changes are being made in terms of NI or tax for anyone moving forward. They're all frozen until 2028.
That's great. Thank you, Ines. Right, we will close the webinar off now. Thank you very much to everyone for joining, and thank you to Dylan and Ines for that fantastic presentation. I think it was really good to have a summary in one place of exactly what has changed and when it's changing. So thank you for that. And like I say, I will be sending you all an email this afternoon with a copy of the slides and also a copy of the recording. Thanks, everyone.